Hello and welcome to the February 16th, 2014 market overview, quantumforex.com. This is Mark, and I'm going to mix things up just a little bit today, where there's a lot of different setups that are coming this week, and really nice setups. We got to be careful for in the euro and the pound for a continued bullish move up, also the Aussie before the correction, and we're going to use some chart comparison to show you that. And what I'm kind of seeing here is really lining up nicely with chart convergence, where the US Swiss and the US yen look like they've got a further drop down before a continue up. Of course, we're going to use caution on that because they can also go the other direction, and we just want to wait for some breaks of support and resistance. And once the initial Monday-Tuesday move gets over with, and we move on from there, we should have some nice trend development. And let's go ahead and start with the pound USD. And again, we're going to be looking for the pound and the euro going the same direction, as well as the Aussie, and the US Swiss and the US yen would be going the same direction. Everything seems to be lining up nicely for that. And then also we're looking for a nice Gartley setup on the euro yen with at least a 200 pip, possibly quite a bit more movement on that. So we'll go over those. So start with the pound USD. I'm pulling up my the charts that I use, a little more of an advanced setup with, I use Bollinger's and stochastics and momentum on the same chart area. And then of course I've sent out the pivot tool that some people requested that. If you don't have it and you want it, mark at quantumforex.com, and I'll go ahead and send that out to you for free. Just want you guys to have some tools that are pretty helpful. You can see this daily R1, R2, R3 for those of you who have the pivot indicator. We are looking just kind of how we use this. We don't really take many trades off of daily R1 and R2 unless you're looking on down maybe on the 5-minute chart. Like for example, we're on the 4-hour chart right here. At the daily R2, we got a bounce back down to R1. There could have been a scalp in there if you can figure that out into your system. But we're dealing with the 4-hour and the daily. We're looking for these to come into the R3 resistance, or the S3, which would be the extension support, the lower support, and also the monthly. Monthly, weekly, daily pivots are always impactive, but especially the monthly. It's very rare you can come up against a monthly pivot and not get some sort of retracement, at least enough to get +1, and then see if it'll ride out for further retracement. Okay, so we're looking to come into the daily R3 here, and I always like to pull a Fibo from the previous swing high, swing low, and you can see that the R3 comes about into the 127% extension. And so we are looking for a short in that area. I'd like to see, because this is such a long move up, the correction on this should be quite advantageous. 525 pips would be this move. You can expect at least that 38% retrace as we go from swing low to swing high. Let's assume we end this right about in this area. No problem waiting for a 4-hour rejection candle, and then wait for the break of the low, set the stops above the 4-hour rejection, and then we're looking for that minimum of 38%. So let's say we rejected and ended up about entry about 34 pips from the top, and let's say we wanted to use a average true range of another 30, so about 70 pips. The first take profit's about 164. The 50% is the next one, is 224. So if we had a 70 pip, that's a 1 to 3 risk down to the 50%. So good risk reward in there. And of course, as we get down closer to the 61.8, look at that monthly pivot coming in. So excuse me. So if we were to get down into past the 50, we'd want to look for definitely taking profits out of that monthly pivot, and possibly look for a rejection candle there to get back in on a buy. That of course would be later on in the week, maybe even the following week, but there should be some play. Look for that rejection candle and you could qualify that on, you know, the 15-minute. You could look for a 1, 2, 3 setup on the 15-minute chart, and then that, for those of you that don't like the, you know, to take the rejection candle and then a break of the low of that, you could wait for an A wave, maybe down to the daily pivot, a B wave retracement, and then get back up in there at the end of that B wave, say on a 15-minute chart, and that position would give you an idea that there's an impulse move down. If that impulse moves down, you're going to want to make sure that at least like this low, this would be, if we break up above, this will become a higher low. You'd want that to be taken out. So a move down and then a move back up. Of course, in this situation, if we get a little bit higher, then you know, those parameters change. But break of the higher low and that retracement on the 15-minute gives you your 1, 2, 3 setup. Okay, so that's the, let's put that down. That's the pound USD. Not going to look at the pound yen. So let's compare that to the euro, where we're at. Notice on the daily chart we're coming up into what we could consider a trend line resistance here. You can see we spiked up above it, and it looks like we might be closing back below that. Let's go down to a lower time frame. Nice wicks up here, and last time we had some nice wicks, we dropped down. Here's a nice rejection here, but then we continued up. So we want to pull in some Fibonacci levels here, and let's just take a look at this Fibonacci wise. Okay, we've retraced back up into an 88% retracement. So on a larger time frame, this can look like a double top. However, it's not the top, but in this scenario, we're double topping up against a resistance trend line. So there's a couple ways we can play this, and something else that we could look at. We can also look at the Elliott wave pattern. Pretty clear. Looks like we're doing 5 waves up. I'm going to try to move through this kind of smoothly and quickly because I want to get to the euro yen, where the real, I feel like the real clear play is this weekend on the euro yen. I'm sorry, next week. Okay, notice that this wave 4, ABC, did not break the top of wave 1, so we're intact here on our rules. And so we've got what appears to be a wave 5 coming in at the 88%. Now, this does not appear to be a wave AB, and then we've got this 5 wave C wave come up, at which point we would be looking for a bearish bat in this case. But as you notice, A wave, if it was, didn't hit the 38, so this is actually completely disqualified as a bearish bat. First off, we don't have a 5 wave C wave apparently. This could not be this couldn't be A, B, and then this C wave, because then that would be wave 1, 2, 3, and 4 wave completely obliterates the top of this wave 1 of C wave. So this is not, according to the rules, Elliott wave rules, a C wave, but this clearly could be a 5 wave impulse. Okay, so we are actually looking overall either bullish or to be in some sort of a chart pattern. Remember, in chart patterns, triangles, rectangles, diagonal rectangles, we see ABCs and 1 through 5s that end within their own height and their own length. In other words, within themselves. Impulse within impulse. In other words, typically we like to see an impulse break out above a retracement. In this case, it looks like this was probably more of an ABC. This clearly looks like it's an ABC. Looks like we have wave A, B, then 1, 2, 3, 4, 5. This one's a little bit hard to discern, but this one is not. Notice that this ABC is about the same length as this 1 through 5. That tends to indicate that we're in possibly some sort of a channel, which if we pull back and look at this, I think we can kind of tell that that is what it looks like we are in. This is kind of little bit of a, on the rare side, but an expanding rectangle is kind of what this looks like. So 1 through 5 up, we could still be seeing ABC back down, or simply an ABC ready for a bullish move up. It's really hard to tell at this point, but what is important is to understand that we can discern where we're at currently with this 5 wave. Now, are we at the top and the end of this? Well, we like to use Fibonacci extensions, top of wave 3 to beginning of wave 3, and we see the 127 is actually puts us really at a double top. So as we saw, the pound might have some room to move up. We see also that the euro might have some room to move up. Now, how we would play this, because it might not. Sometimes 110 is all we get on a 5th wave, and we have to be available to trade this, but we also have to have some qualifications for this trade, even though we're within an area. Of course, trend line, we didn't close above it on the 4-hour, and we've also missed our 127. So that puts you in a little bit of a discrepancy, but it's still predictive. And since we don't typically take trades on predictive, at least not full lots, you could put a partial lot in here on a sell. If it moves up and bounces, you're still within 40 pips, so you have a 100 pip stop loss, and this clearly has the potential to go from this point at least down to an 88%, say, roughly in here, 170 pips with a 80 or 100 pip stop loss. That would be a first take, and it could drop 300 pips. So we are within a risk-reward ratio on that, but we can do better, and how we can do that is to go ahead and make it qualify. So notice that we have this closing candle. It's a daily candle. Let's see what happens if we put a snap a line right below the bottom movement, price movement of that candle, and if it breaks that, we've got a huge likelihood that it'll continue down, because we've broken we've gone below the previous price range on Friday of that daily candle. Let's look at what that looks like on a lower basis here on the hourly. Okay, so here we have, that would probably be more accurate. Here's our support line, which would be, let's pull out to the daily again. Okay, you can see that's the bottom of that daily candle. Let me zoom in here a little bit so you can see what I'm talking about. So right at the bottom of that daily candle, if we come down to the hourly, we can see where that line is, and it is indeed a nice support. So if we were to break that, and especially if we break it, the ideal way to play this, let it break and come back up and retest and put in a rejection candle right there. That's a perfect entry then. And your stops, let's say we just move down from here, you put in a rejection candle again, your stops go above your high up here, so you're about a 50 pip stop loss. That's how you play this if it does not move up to our 127%, which puts us back up at this resistance level. At this point, you could certainly on a rejection candle, especially a 4-hour rejection, take that short. Or if we just continue to move down and break our low, let it come back up and retest, at least on the 15-minute or the hourly chart. And then you can short that and just hold that until we get down to at least around the 88 support level, which is going to be, when we have to measure it, you can just tell that here's support right in this area. So you get down into this support level, which is the 78 to 88%. I guess I will measure it to show you that, you know, we're just roughly where the support is. That's okay, that's a 78. The 88 would be down at this support level where these candles found support. Okay, so that's certainly our initial target, is down in here, and either the break, or if it moves up, gives us a little better risk reward, but you're going to want to qualify a rejection, because this certainly could become a extended 5th wave and move up into 161, 178, which would be about the top at this resistance. So you don't want to just go in all at the 127. You want a good rejection candle, and so you can establish a parameter for a stop loss. Okay, so that is the euro. Moving along at the 15-minute mark, let's go ahead and with the Aussie, since we're talking about some possible moves up on the pound and the euro before they move down again. The Aussie is also in a nice place. Here on the 4 hour, we're moving into a double top. I've already put in the divergence here so you can see that our 4 hour had a real nice divergence. Okay, so this is where our high, and this is where we started diverging. And so between these points you can see we clearly have a nice divergence. Okay, so what we're looking for then is a break of the higher low and then a retrace. Well, we didn't get the break of this higher low down in here. We actually came down, and if you were to measure this, it would have been just about the 88%, which if we drop down to the hourly, looks like it could be an ABC. Okay, so that's also similar to what it was on the euro. So we're not entirely clear at this point whether we're going to be moving up above this impulse, but what we do know about Elliott wave is that if this is an impulse leg to eventually impulse above our 4 hour high here, first off, we've got nice divergence. So the probability is for a further drop. But also, if we impulse up, we should look for wave 1 and then a retrace of wave 2. So this is clearly impulse. We're still looking for a retracement of somewhere down into this area, more than likely for a wave 2 retrace. So either way, there's a good opportunity and possibility for the next week for this to retrace substantially. Now this is, to move from here, is about 80 pips, so there's not nearly as much as what we saw potential in the euro or the pound, but there's something here. And the way that we're going to want to play this is similar. If we get a move back up into this resistance level, let's go ahead and pull a Fibo and see. Okay, this line is about at the 88%, and it's also the previous resistance and support right in here. So if we moved up into here with a hourly rejection or even a 15-minute rejection, of course the lower time frame rejection you go, the less probability you have of success. Keep that in mind. But this could be a place to short, and we're only 20-some pips away from that. The other thing is if we break this low that we're currently at, we could look to short, and then that defines our stop loss really nicely by putting it about 30-some pips, and we've got about at that point we'd have about a 65 pip for our first take profit, with 1 to 2, which 1 to 2, as you know, is a good for a first take profit. And then let me show you where we're expecting this as a possibility for our overall trade. If this is indeed with divergence, and this is a wave 1, I'm sorry, a wave A, a wave B, so an ABC, which I'm not saying it is, and it doesn't seem to have the characteristics of it, but we don't want to rule it out. And our first take profit would come down to around that 60 plus pips. If we broke here, if we went up to here, we'd have more of an 80 pip before we short. But we get that +1 at least, plus we get some profit out, and then we hold that, and if it wants to, and it does, and it moves down to our nice typical extension of 127, and then of course you have your 161, 178 extension. Now we're looking at some nicer risk reward. Here our first trade, that would be 120, 170. If we took it, if it does move up and we take it on a bounce of the 88, that's 150 and 200. Okay, now what could this be? What this could be is wave 1, 2, wave 3, ABC for a wave 4, and we know that wave 4s typically like to end just above the top of wave 1, which puts us at this 161, 178 extension, and also a 61.8% total retrace, which you can see how that comes just above the actual resistance. We spiked above it, but the actual body resistance, it's about right in there. So I would have this area between the 50 and the 61.8 on the overall retracement would be my second and third targets, which would give me that better risk reward. My first target I would have at about the 78 to 88 of this initial retracement, just in case this was an ABC. It's hard to tell. Things are not always clear Elliott wave, so that's where we adapt. And in case it's an impulse wave up and we're going to do an ABC down, more than likely you're looking at around that 78 to 88% retrace, which puts us right in about this support. Okay, so that's why that's your first take profit. Come +1, and then just let that ride down. If it breaks the low, then you know you've got a good chance to go into your 127 and then your 161 zone. Then you're looking to buy in this same zone where you short to. You're also looking around to turn and buy from that zone, and of course then you got to go through the whole thing of qualifying again at that point, and you might want to bring in some stochastics then. And again, anything that you guys don't understand, if you want to know more, you can always email me, mark@quantumforex.com, and I'll get with you. And sometimes it's just a matter of talking to traders and tweaking a few things. Sometimes it's a matter of getting into some of our course material, and we can always talk and kind of a free consultation and decide what the best direction for you is. Okay, so those are the bullish moves that might be out of the gate. Again, we could just back up on all these and go south immediately, and either way I've identified how we can catch those trades. The US Swiss, this is a trade setup I talked about last week, and I'm going right to the daily chart to give you the same setup that we had, where we've moved up, I believe impulse wise, and we're doing an ABC retrace. I think you can see how we supported out at the 61.8, and we're now moving, and I talked about this last week at the beginning of the week we were up here, and I said to look for a short, and you know, it's not a real glorious short here. It you know, moved 87 pips all week down, so it's, you know, we had a few days of moving up and then we moved down the rest of the week, but we did not hit our support level at the 78%, which, knowing that the Swiss moves the opposite typically of the euro, we said the euro could have a further move up to that 127 extension, and I forget how many pips, I think that was about 50 pips. So we have about 47 pips to the 78%. Pull up the 4 hours, you can see a little better. If we continue to move down, we've got about 42 pips to move down to the 78%, and about 50 on the euro to move up. So those, and the pound was looking to move up some, and possibly the Aussie. So these charts are converging in confluence right now. They're working together, and they seem to have similar setups. But the nice thing about it, look at the support level. A lot of activity, consolidation, then a move up, then another support level at the 78, and that would give us that Gartley. And so that's what we want to be looking for to trade. I'm just going to draw it in here for you real quick. I haven't done it on the other one, so I'll do it here. And I realize for some of you this can get redundant, and you know, at that point just stop watching the videos, but others are still learning from all this, and the visual helps them. Okay, so there would be our Gartley pattern that we're looking to take advantage of. And the expectation the whole time, we thought that this was a move up. Let me pull in the momentum oscillator. And you can see how we've had this divergence all the way from back here. As these candles were moving down, our momentum oscillator was diverging. And so we were expecting this to be a 5-wave impulse, an ABC retrace. And I don't want to get into wave counting this right now. It's a little bit messy, but X waves sometimes are. And an A wave especially does not have to be a 5-wave impulse. Waves 1 don't even have to be, they typically are, but especially an A wave. So very possible that we're experiencing an ABC and we'll move up. Now, how far did we move up into? We came into the 78%. For you harmonic students, that's the A leg of a butterfly, which the first end of the C wave target is 127, 138%, which is right in here. Okay, so we're talking about this Gartley being a real nice possibility, because that could turn into a nice 500 pip movement. I showed you also on the Euro USD, if we can go back to that real quick, how there's the possibility of this being a expanding rectangle, as it were. In that case, we've got about 500 or 300 pips there. Now, if we I'm sorry, I've been saying expanding rectangle, I mean expanding triangle. As this is going out, it's creating a triangle, so apologize on my terminology there. But if this were to work at the similar angle, and we just reverse that angle to come down, I'm not saying this is going to happen, but if we're looking at a 500 pip move on the Swiss as a possibility, and all conjecture, you know, there's 350 pips. So, you know, we would actually be looking at actually we'd be, in order to get something similar, we'd be looking at moving down overall into this area. Let's pull a Fibonacci level. I'm just looking at this for the first time here, but let's just say this is an A, B, C. This is real messy for a C wave. I don't think I can buy that. Yeah, we'd have to come down into this 88% support. So as far as being any identifiable Elliott wave or harmonic, not really happening, but you know, who knows? This is pretty messy, obviously. All of this is pretty messy. That's definitely longer term prognostication, but I think we can see that if that Swiss does begin to move down, and then turn around and move up, we can see at least a channel in which the euro is trading, that we could be expectant of at least 200 to 300 pips on that. Okay, so that's the Swiss there. Now 161 to 178 is also a butterfly. That's the outside of a butterfly, and you know, by the time you start getting to that, then we can start pulling Fibonacci retracements off of the tops of these highs as we move our way up and get some more Fibonacci confluence for you advanced students. Okay, let's get quickly into the US yen, and then I'm going to hit the euro yen. What does this look like? Looks like a triangle chart pattern. Which way do they typically break? They typically break down, or the direction of the last impulse, which was in. So we are expecting this to move down a little bit farther upon open. And what might that give us? Well, if we come out to the 4-hour, that could be giving us a wave 1, wave 2, and then a wave 3 bullish move up. Let's see how many pips are involved if we break out of this move down, 60 to 100, something like that. And we're still looking at this 1, 2, 3 wave 4 retrace. We were hoping to get down to the 61.8 before we moved out bullish. Overall on the daily, we're still bearish because we haven't broken the tops of this consolidation up in here, the lower high. So we are still bearish. So there is that possibility of this moving down, and this, I'm showing you this to show you something on the euro yen. 179 pips is potential. It does look like we've got some consolidation, bearish consolidation, to move down further out the gate here. This could be wave 1, 2, in other words, a wave A, wave B, possible wave 1, 2, 3, 4, 5, moving down, breaking that 50 possibly, and moving down to 61. There's certainly a possibility there. We want to look for that. I'm not really interested in playing the US yen I would on the first break. After that, I want to come +1. What I am interested in is how that influences the euro yen, because if the euro USD is looking for a drop and the US yen has a drop out the gate, but the euro USD might move up out the gate, then that gives us an interesting scenario here. Let's drop down to the hourly on the euro yen. Okay, first off, it appears we have an impulse. 1, 2, 3, 4, 5. I'm looking for an A, B, got a rejection candle. Interesting to note where these rejection candles come in at Fibonacci levels. Rejection candle came in right around that 88% on the Fibonacci level. And we first impulsed up on the hourly here, came in at about the 50, pulled back, moved up into the 88. For some of you, I put a call out for a short around that area. And then we moved down, nicely impulsed, came back up, and what I'm looking for now is that this is an ABC. I'm looking for wave 1, 2, 3, 4, 5, a 5-wave impulse down. Now I'm not convinced. It is possible, and I am going to be looking to short if we move down from here and break this activity in here. If we break that and we move down, I'm going to be looking for a shorting opportunity. But this looks impulsive. This looks, consolidation wise, looks like a retracement. I'm down to the 30-minute candle now. Okay, what I'm looking for is a Gartley out the gate here. So I'm waiting for a little more retracement before I short. If we just go down and break these lows, I'm going to get short. But what I'd like to see is a retracement back up into the 78%. Okay, let me get rid of this larger. Back to the 30-minute. Okay, so we came in and tagged the 61.8. We retraced, and now it looks like we've consolidated nicely in an A, B, and we're looking for a C wave move up into this 78%. That would be a very nice short, because that gives us a Gartley. I'm not going to draw it in for time's sake, but after that we're looking for a nice impulse move down back into this 4-hour. That would be wave 1, wave 2, and then we start 5 waves down on our C wave. Wave 1, if we get a Gartley, that's a wave 2. We're looking for 5-wave impulse down to complete this ABC. And where would that ABC go to? That's fairly easy to figure out, at least predictively. The first one came to 38. We always assume the harmonics, so we're looking for a bullish bat at this point to end down around the 88%. Okay, how many pips is that? If we get our Gartley, that is 272 pips. This could very easily play out the first 3 days of the week. Okay, so that's why I like the euro yen. I saved it for last to go over. The euro, all we have to do is pull up 42 pips. That's about what we have on the euro to move up north. If the euro moved up strong, it would pull this up into its Gartley. Even if the US yen is nudging its way down, if we get a strong move on the euro, it'll pull it up. And then with that euro dropping, and especially if the US yen is still dropping to its 50%, you're going to see this nice 5-wave impulse move down. And then of course at some point, if, again I'm using a lot of ifs here, but if the I guess we're going off at this point. If the US yen moves down to the 61.8, then we definitely would be looking bullish on the yen. That's approximately 189 pips. And what did I say we're looking for on the euro yen drop? 270 some pips, about 100 pips more than what the euro yen would move. That's typical, than the US yen would move. That's typical for the euro yen to move approximately 50% to double what the US yen is moving. So those ratios work, and I'm very anticipant of this trade setup, either at a break of this low, which I hope that doesn't have to go that direction. I would very much like to see this retracement up and give us a nice Gartley, and then we want to enter at, load some lots into that, look at the risk reward on this. The stop would go above about 35, let's just say 40 pips. Well, actually it's less than that because I didn't measure from my line. Yeah, you've got 27 pips, so let's call this 35 pip stop loss for a, not even to the 78, just to a support level here, is 221 pips. So that's about a 1 to 7 risk reward. So, you know, if you could put in 1% on that trade, that's a 7% gain right there. And that's not to mention the other setups we have. So that's my favorite out of the gate. Closer in is the Euro Yen. Then also my favorite here is the US Yen at this Gartley. I'm sorry, US Swiss at the Gartley for a buy. And then if the US Yen gets down to that 61.8 on this daily, excellent opportunity for a buy, and that could overlap with the buy on the US Swiss, and also another buy on the Euro Yen. After this short, you're going to want to look to buy around the 78 to 88, because this then, if it gets down in here, will become a bullish bat, and these are going to be buy levels. And then watch out on that as that US Yen takes off north. And if we bought around this 78, we've got at least up into this support level, I'm sorry, resistance level, kind of a head and shoulders here. Back up into this would be about another 500 plus pips. So very good opportunity there this coming week with some nice setups, and I'm going to let you guys go now. God bless you. Don't forget to email if you have any questions. Mark at quantumforex.com. Bye-bye.